Hello investors, welcome to Simpli Stocks. Today I will be sharing 4 interesting microcap or penny stocks with you from my tracking list whose business models I find quite interesting. We'll talk about their businesses and their results. Alongside, I will also share my personal strategy with you which I use for investing in penny stocks. But please note, none of these stocks are buy or sell recommendations in any way. All 4 are very small businesses, hence they are quite risky too. So do keep that in mind. With this, let's begin. So the first business we will discuss is Integrated Industries. Integrated is an FMCG business. They sell cookies and biscuits under their brand name Rich Light. Integrated has a plant in Neemrana, Rajasthan with a capacity of 3,400 tons. They also get biscuits manufactured on contract basis through other factories, and apart from this, they are also setting up a new 5,000 ton plant in Secunderabad, UP, which will be operational by March next year. Once that plant goes live, their manufacturing capacity will become 2.5 times within a year. This means the business can grow fast over the next 2 to 3 years. And in penny stocks, this is the most important thing. Or I should say this is the only thing that matters, which is fast earnings growth. Their Rich Light biscuit is mainly sold in northern states of India. So if you are from North India, you may have heard of this brand. Anyways, around 75% of their sales come from India and remaining 25% from Dubai, Africa, etc. Let's come to financials now. In FY25, meaning last year, they did sales of almost 770 crore rupees, and at an 8.8% profit margin, their net profit was 68 crore. Sales went up by 132% year on year, and profit increased by 172% compared to the last year. Right now, Rich Light is completely playing a distribution game, meaning they are focusing on how their biscuits can reach more and more retail stores. The business is currently trading at a PE of 10 and market cap is around 550 crore rupees. Their management is targeting to grow their sales by 50% this year, that is FY25. And once their Secunderabad plant goes live, they are targeting 75% growth next year. The second business on our list is even smaller than Integrated. Its name is Texel Industries and its market cap is currently less than 200 crore rupees. And I was looking into it and I found something very interesting. This is also a portfolio stock of Ashish Kacholia. He holds around 8% stake in it. Texel had raised funding in October, during which the ACE investor invested. Let's talk about the business now. So Texel manufactures these eco-friendly geomembranes, geotextiles, crop covers, etc. Their products are used in agriculture, nurseries, greenhouses, animal husbandry, water reservoirs, and water conservation, landfills, etc. And as you know, right now the focus on eco-friendly products and methods is gaining fast. So this is also a good trigger for Texel. They have 2 plants in Kheda and Santej of Gujarat, through which they have a total capacity of producing almost 23,700 metric tons of sheets per annum. Their business has picked up recently. Like if you see on screener, in earlier quarters they had low growth. Sales declined 3% in June. Then there was 12% growth in September, then 20% in December. But in March, their sales increased 60% year on year. That's very nice. And the business has also turned profitable. They earned 3.5 crore rupees profit in Q4. Now see, screener will tell you a PE of 40 because it includes all the quarters from April to December where profits were negligible. But if we assume that Texel earns at least 3.5 crore profit every quarter from this year, then their estimated profit for FY26 comes out to 14 crore rupees. And the company's new PE based on 1 year forward earnings comes down to just 12 to 13. But see, the risk in Integrated and Texel, and not actually in just these two, but in all microcap and small cap businesses, is that things can go horribly wrong at any time. Sometimes sales will stop coming all of a sudden. Then there might be some fraud. These are so small businesses that anything can happen. So when you are investing in small caps or micro cap, you cannot apply the buy and hold strategy blindly. You know, at one end, your portfolio stock is giving poor results, the stock is falling, and at another end, you keep making excuses. You are singing songs that you are a retail investor, long-term investor, and all that. So it is not buy and hold. It is buy and track. You have to keep tracking the results. That's why we have created a personal WhatsApp community for serious investors where we closely track more than 100 good quality stocks. We cover their business models, valuation, risk factors, how their results have been, everything in detail. Here, I also share my portfolio with you and I am there for you to clear all your doubts on one-to-one level. But yes, we do not give any buy or sell calls on any stock. We are not SEBI registered. My job, as I see it, is only to provide you with correct and complete information on stocks. If you are interested, then you can send me a WhatsApp message on this number. Otherwise, we have also given a link in the description. You can message us using that link. And remember, this is a paid community with a monthly fee of just 850 rupees. Meaning for just 850 rupees per month, you are getting to know about so many good quality stocks. And yes, there are two plans, 6,000 rupees for 6 months and 10,000 rupees for a full year. In the 6-month plan, your per month cost will be 1,000 rupees, and in the annual plan, your per month cost will be just 850 rupees. So if you are interested, you can contact us using the link below and you can join the community. Coming back to our stocks, at number 3, we have another business from Ashish Kacholia's portfolio. He also holds around 8% stake in the business. Its name is Naman In Store and it belongs to the retail sector. It is into the business of manufacturing the furniture and fixtures for retail stores for clothes, shoes, etc. They also make such display stands you might have seen at airports. It is somewhat a unique business. Apart from that, they have also an industrial business segment under which they make battery stacks, control panels, and office compactors. But their interesting segment is retail furniture and fixtures because that's where good growth is coming from. For example, India's organized retail market itself is currently growing at 25% CAGR. So when the sector is growing so fast, there is much more scope for a small business like Naman. And if we talk about their customers, you will see here that they have executed orders for well-known companies like Bata, Raymond, Nykaa, Reliance Trends, and Asian Paints. They currently operate from a plant in Vasai, Maharashtra, and for future expansion, they have taken land on lease in Butibori industrial area near Nagpur, where they will shift their manufacturing. They are going to set up a bigger plant there. For this, the company did an IPO last March, during which they raised 25 crore rupees from the market. Now look, there has not been any significant sales growth in FY25. In H2, meaning the month from October to March, the sales growth was good 36%. But what happened was in H1, that is from April to September, their sales had dropped compared to the last year. So the full year sales growth was just 7.5%. Because of this, the results for this year, that is from April to September months, will be very important to watch. How they perform in H1, that will be a major trigger for the stock. And that's because their sales had fallen during this period last year and the base is so low. So on low base, whatever growth comes, it will automatically appear larger. Further, if we look a bit farther, this entire year will go into setting up their new plant. So the remainder of the sales growth will only start coming in from next year, that is FY27. And for that to happen, it is very important that the new plant gets completed timely. So you see, however good business is, you have to keep tracking the business. You can't just sit and hope. Anyways, let us come to our fourth and final business on our list. Stock's name is HOAC Foods. And as you can see on my screen, this company is in the business of processing and selling kitchen items like flour, spices, pulses, rice and oil. Their brand name is Hariom. HOAC sources all these items from farmers and dealers. Then they process and pack them at their two plants. They have their own stores in Delhi NCR through which they sell their products. Apart from this, they also supply flour to well-known company Country Delight. So that's their B2B business. Let's take a quick look at the financials. So you will see here in 1 year, sales have grown 69%. Net profit is up massive 143% year on year, and net profit margin has increased from 6.6% to 9.4%. Now see, in FY25, their sales were 27 crore rupees and their target is to double their sales this year to 55 crore rupees. Management is saying that they will be able to sustain the margins. If we assume margins remain the same, if sales double, then profit will also double. So even though Hariom's current PE is 30, its 1 year forward PE based on FY27's estimated profit comes to around 15. So HOAC is also entirely playing the distribution game. They currently have 16 stores and this year they plan to open 10 new stores. Along with that, they are also working on launching their D2C app for direct delivery and expanding their retail network. But HOAC is still a very small business. Their market cap was under 80 crore rupees last time I checked. So although one good thing is there, despite being so small, the company is releasing investor presentations and conducting conference calls with investors. But see, there are a lot of risks as well. That's why with such small businesses, you have to continuously keep tracking them. Now, at the end of this video, I want to share my strategy for penny stocks with you. I have seen that people often make these mistakes when they are investing in penny stocks. So look, whenever I invest in a penny stock, I start with a very minor allocation, just 0.5% to 1% of my portfolio. Like if my portfolio is of 10 lakh rupees, then I will invest only 5,000 to 10,000 rupees in such a small business. Now, this may seem like a very small amount to you, but there are 2-3 reasons for that. First, the main reason for investing in a microcap business is the fast growth itself. If everything goes well, the business will grow fast on a small base and can easily multiply my investment 3-4 times in just 2 to 3 years. That means my 0.5% to 1% allocation there is equal to 2 to 3% allocation in a large cap stock. Secondly, if the results are bad, I'll not have to suffer a heavy loss, because problem with microcap stocks is that they are so small that liquidity is a big issue there. So if tomorrow some fraud happens in the business or the results are terrible, the stock will keep hitting lower circuits and you won't even be able to sell the stock. So from a risk point of view too, you just cannot make a large allocation to a penny stock. You won't be able to exit instantly, and by the time you will be able to sell, the stock will be 30 to 40% below your buying price and you will be forced to book that huge capital loss. And the most important thing is you cannot be casual at all when it comes to micro cap or small cap businesses. You can't just invest the money and forget it. You have to keep checking every 3 months, every 6 months, whenever the results come out. These are such small businesses that anything can go wrong anytime. So you must have a solid entry and exit strategy. Now, let me know in the comments which is your favorite penny stock or micro cap stock. And if you like this video, then do give me a thumbs up. And you can also subscribe to our channel Simpli Stocks. Your likes and subscribes are our only motivation so that we can keep bringing you this kind of research for free. I'll see you in the next video. Happy investing.